It's time!
Decentralized finance has flipped the world of finance upside down. It's not the bankers and stock traders ruling in DeFi, it's average people from all walks of life. And my community is proof of that. If you know where to look, money can be made in crypto at any time. And I think I have a pretty good eye for finding the coming narratives in crypto. But this one is as clear as can be that anyone could spot it. So are you ready to zero in on it with me? Well, get those binoculars ready because it's time for Chico Crypto. Decentralized finance, short DeFi, is quite amazing. In crypto, you can make money in many different ways with DeFi, as a liquidity provider or taker, as a borrower or lender, as a leverage trading longer or shorter, as a bond trader, as an option trader, as a yield farmer, or airdrop hunter. Shoot, you can even be a micro real estate investor or an insurer in DeFi, and the list goes on and on. But one of the safest ways to make money on your crypto at any time in DeFi is by staking crypto. And in the world of staking, nothing is dominating more than Ethereum. Ethereum staking is the biggest market in staking. There is no doubt about it. Checking out Beacon Chain, we can see nearly 20.7 million Ethereum have been staked so far. And at current Ethereum prices of nearly 2K, that puts the Ethereum staking market valued at over $40 billion. These staking markets are actually tracked on stakingrewards.com. And as we can see, the next biggest staking chain is Solana at 7.5 billion. That means Ethereum staking market is 433% bigger than dying Solana's. Actually, Ethereum is dominating so much in the staking market, if you add up the markets ranked number 2 through 10, which besides Solana includes Cardano, Binance, Avalanche, Polkadot, Tron, Polygon, Cosmos, and Hedera staking, their combined staking markets still wouldn't outdo Ethereum's. This is where the major money is, and even more money is about to flow into this growing market. Why? Well, it's where the road leads. Checking out the most recent Ethereum development roadmap posted in November of 2022, we can see after the merge, the next big updates were withdrawals for validators and distributed validators. Well, as we know, in April of this year, Shapella went live on the Ethereum mainnet, which included withdrawals. That means this roadmap stop is done, it's completed. The next in line? Well, as we can see, it's distributed validators. Now, there is a group of projects working on distributed validator technology, or DVT, and today I'm going to dive into a majority of them because following the yellow brick road of Ethereum has paid off many times in the past. So, the number one DVT project we have to cover is the project building the most popular DVT technology on the market, and that is the SSV network. Checking out SSV's website, we can see they are all about distributed Ethereum staking, aka DVT. But how far along are they on this technology? Well, scrolling down, we can see they are out of testnet stage and onto the release client and moving on to launch and full mainnet. Does this mean coming soon, Tyler, like in the next few months? Well, SSV just had their mainnet call yesterday where they discussed this path to the mainnet and when it was happening. And this was what was said about when the limited launch was coming.
Let's see, we've got Shiny Lance who would like to know when is limited launch and do we have a date?
Yeah, so as I shared, the limited launch we're going to start at around August.
Brilliant. So it's not long, right? We've already started, as Alon mentioned. We're already in mainnet now, and we're looking at what, another month or so to hit that next stage.
Limited launch at the beginning of August. If everything goes smooth with that, then in September they will launch with their partners. And finally, a full permissionless launch in October. So SSV should see bullish movements on the way to their mainnet launch. Another reason, SSV is a layer. It's a project and middleware for Ethereum that other projects can build on. And many of those projects are ready for SSV to go live with their mainnet. One of those projects is STADER. Going to their website, they are all about multi-chain liquid staking. And if we click on networks, we can see they provide liquid staking solutions for 6 different chains, including Polygon, Near, Hedera, but the 7th is coming soon, and that is for Ethereum. Here we can see STADER recently tweeted, "It's time, get ready to power up your ETH with ETHX. The date is set, July 10th, 2023. See you on mainnet." July 10th is the launch of their Ethereum solution. It's dropping on the mainnet. So how is STADER's ETHX going to work? Well, going to their website section, we can see it works through 3 different types of pools: permission stake pools, permissionless stake pools, and finally with DVT stake pools, the ones we were looking for. So when SSV goes live on the mainnet, will STADER be ready to be the first major deployer in the DVT space? Well, SSV tweeted about them all the way back in January of this year, talking about them using their DVT for their ETHX pool solution, even saying the use of DVT will allow optimized yields for STADER stakers and reduce capital requirements for operators. Ultimately, it will promote our common goal of keeping Ethereum safe and decentralized for all. So yeah, STADER has been building on SSV for a good while. They are definitely one to keep an eye on over the next few months leading up to SSV's full mainnet release. No doubt they are a launch partner, so around September is when we could see DVT pools on STADER. But besides this coming narrative, STADER has a lot going for it too. Checking out DeFi Llama, it has over $94 million locked up in its solution, and their market cap is just $31 million. Remember friends, this isn't even with ETHX, which will eventually be their biggest and most liquid pool on any chain. There is so much room for TVL growth with ETHX, which usually means a bump in a token's price. Now that we've talked about the tokens that are trading, let's switch gears and hunt for those airdrops. The DVT projects who don't have a token trading yet. But before we get into that hunt, it's time to cover the sponsor of this video, Meld. And like always, the full details of our agreement can be found in the description. Meld is the banking stack for DeFi, bridging the gap between fiat money and cryptocurrencies by providing financial tools and services to the masses, including the unbanked. How? Well, Meld is a non-custodial Layer 1 DeFi protocol, providing cross-chain lending, borrowing, staking, as well as integrated fiat banking. Meld is empowering users to take control of their finances, which will position Meld to become a leading player in both DeFi and neobanking. And Meld is offering an exciting promotion to help make this happen. So let's dive in. The Meld blockchain was built specifically for capital efficiency using the Avalanche subnet tech stack because it provides fast, low-cost transactions that is fully EVM compatible. Meld is interoperable with 6 of the leading blockchains, which allows seamless asset transfers and bridging. And by the way, Meld is actually the largest Avalanche subnet by validator count. Meld is unique. Not only does it natively support DeFi, but also the traditional fiat accounts through its Meld Finance arm. Meld Finance, or Meld.Fi, is a fully regulated new generation EU-based neobank to offer fiat depository bank accounts and debit cards to users. Yeah, Meld offers fiat and crypto, a seamless transition between the two, unlocking the true potential of your crypto assets without you needing to liquidate it every time or triggering all those tax events. The Meld app is a cross-chain, non-custodial wallet, providing users a secure, convenient, and user-friendly way to store, manage, and transact their digital assets across different blockchains, including Cardano, Ethereum, Meld, and Avalanche. Meld is a pioneering decentralized lending and borrowing protocol that seamlessly functions across multiple chains. It's non-custodial and governed by the Meld token, which provides users the freedom to contribute liquidity and earn a yield or borrow crypto or fiat currencies in a transparent and secure manner. The Meld utility token is currently trading on DEXs on 4 different blockchains and on some centralized exchanges. But to celebrate the upcoming launch of their Meld neobank and Meld.Fi, they're giving away free airdropped Meld tokens to everyone who simply joins their ecosystem. And one lucky participant will even become a Meldionaire and be airdropped 1 million Meld tokens. Earning free money has never been easier. All you have to do is join. You can even earn more Meld for every person you refer, or for participating in social tasks, as well as weekly challenges or performing various on-chain activities. Signing up is easy. Visit the Meld airdrop landing page, create your Meld dAPP wallet, get your early access pass, and follow the prompts. Don't miss your chance to earn free money and to participate in Meld's revolutionary fiat neobank, plus their non-custodial crypto wallet, so you can earn, save, spend, and swap at competitive rates. Links to sign up for the airdrop and everything Meld can be found in the description. Now back to DVT airdrops. There is actually one many of you can claim right now, because I know many of you in some form, some way have staked their ETH somewhere. DIVA DAO is airdropping 10% of their supply, and the tokens can be claimed right now, although they aren't transferable as of now. The claim can be found at claim.diva.community, which I've included down in the description. All you gotta do is connect your Ethereum wallet from where you have staked, and it should tell you if you're eligible to claim. But who exactly is eligible? Well, DIVA has a Medium article that explains this. It says, DIVA OG contributors, including early supporters, researchers, developers, advisors, and community members. Ethereum stakers from ETH Staker, Rocket Pool, SSV, Lido, dAPP Node, etc. Community members from Gnosis, Uniswap, ENS, Aave, Maker, Aragon, and other DAOs. Which I know is many of you at home. Connect all your wallets and check your eligibility, because those are tokens. And in a few months, the tokens will become transferable and tradable, meaning they're worth money. Now, there is a final project I want to cover who I feel will be doing an airdrop, although nothing is announced just yet, and that is OBOL Network. Now, OBOL Network is in a race against SSV. OBOL is building its own DVT solution, and they are both, OBOL and SSV, getting ready to go full public mainnet. OBOL is in a similar place as SSV. They are in their client release alphas as I speak. Now, diving into OBOL's path to their mainnet blog posted in February, they speak of OBOL V2 and say, while the roadmap to V1 is an exciting one, we have been actively working on our vision for OBOL V2. OBOL V2 is primarily focused on the trust minimization of distributed validators through enhanced applied cryptography and crypto economics. Crypto economics, aka OBOL, is going to launch a token. So my friends, I would definitely get involved with OBOL. Join their community, aka Discord. Ask around to see how you can get deeper with the project, because projects who airdrop always reward loyal early members. Also, go to their testnet and figure out how to deploy a cluster on their test networks. OBOL has a launchpad for making this easier for non-coders to understand. I've included this all down in the description. Well, viewers, roads in crypto, they always lead to hype cycles, and this hype is easy to spot. I would expect these coins to do well over the next few months. And once DIVA and OBOL's tokens are tradable, they will reward the airdrop receivers very well. So if you like this content, don't forget to subscribe and follow me on all my socials, Twitter, Insta. Join the chat on Telegram. All links are on my YouTube profile and down in the description of every video. Cheers. I'll see you next time.
most trustless name in news.